Please note that the analysis presented here is for educational purposes only and should not be construed as investment advice. Trading and investing carry a significant risk of loss, and it is important to conduct your own research and analysis before making any investment decisions. The information presented here is based on past market performance and is not indicative of future results. The decision to invest or trade should be based on a thorough understanding of the risks involved, as well as your personal financial situation and investment goals. We cannot guarantee the accuracy or completeness of the information presented here, and we are not responsible for any losses that may result from your reliance on this analysis. Always seek the advice of a professional financial advisor before making any investment decisions.
Hello everyone. In today's analysis, we will be analyzing Ukoil. First, let me give a brief explanation of what Ukoil is. Ukoil is a financial instrument that represents the price of crude oil produced in the United Kingdom, specifically the benchmark grade of crude oil, called Brent crude oil. Brent crude oil is a light, sweet crude oil that is widely used as a pricing reference for other crude oils around the world. As we have learned from our previous lessons, we will be identifying key support and resistance levels and placing our guidelines on the monthly chart for Ukoil. You can see 4 important guidelines on our chart. When placing these 4 guidelines on the monthly chart, an important aspect to note is that, as we have seen in our previous lessons, the third guideline represents an example for identifying a rise in a downtrend. The area we will be examining in our chart is highlighted within the orange circle. Firstly, we will be placing our standard Fibonacci ratios on the area we will be examining in our chart. As we have learned from our previous analyses, our third guideline has broken upwards in the past but has since entered a downtrend, with the possibility of retesting the third guideline. Therefore, when we place our Fibonacci retracement tool on our chart, we can see that our 0.618 ratio is very close to our third guideline. In our second scenario, let us assume that our price has moved below the 0.618 ratio in our Fibonacci retracement tool and has broken downwards past our third guideline. In this case, our potential testing area would be the 0.786 ratio near our second guideline. As for the possible movements of our price, we will be considering 2 scenarios: a potential upward price reversal at the 0.618 retest zone discussed in our previous page and another potential upward price reversal at the 0.786 retest zone. Our first potential scenario is based on the 0.618 Fibonacci retracement level. When evaluating this scenario, the question that typically comes to mind is, how high can the price potentially rise and which levels should I be watching? To answer these questions, we will examine past movements and make predictions based on the widely used standard Fibonacci and reverse Fibonacci analyses, which will be heavily incorporated into our analysis. Our second potential scenario is centered around the 0.786 Fibonacci retracement level. As we evaluate this scenario, some common questions arise: what is the potential maximum price level, and which levels should we monitor? To address these queries, we will analyze previous market movements and apply the widely used standard Fibonacci and inverse Fibonacci techniques, which will play a significant role in our analysis. As we can see from the chart, we place upside moves and pullbacks in the green circular area. Notice that only the upward movement of the orange circular area looks similar to our chart. In our comparison here, we will assume that our guideline number 3 is crossed and similar to the past move. Our analysis in our orange circular area goes down to the 0.786 Fibo ratio, and we will extrapolate as if it is making a turn. We will conduct an analysis of the orange circular area on the graph, which visually resembles the green circular area. To identify similar upward movements, we first overlay the red arrow from the green circular area onto our graph. As we can see, the retracement ratio in our previous graph was around 0.786. Subsequently, our most recent red arrow has experienced an increase up to a certain level, which we designate with our dashed purple line. To determine the upward potential of the price movement following the retracement from the Fibonacci 0.786 level in our previous graph, we place our inverse Fibonacci tool from the peak of the graph downwards and examine it. Now, let's perform the same process for the orange circular area. We will place our inverse Fibonacci tool and determine the potential upward levels following a retracement. Let's now take a look at the relationship between the 0.618 retracements in the past. In this case, assuming that our graph reverses and returns to our number 3 guideline, we determine our ratio accordingly. As seen on the left Fibonacci, our graph has made a 0.618 correction and then moved up at a certain rate. Just like we did with the 0.786 ratio before, we can predict the possible upward movement in our graph by adapting the upward ratio in 0.618. Let's assume that the second guideline on our chart is broken. In this case, the fourth dashed guideline will become active. In summary, by considering the characteristic movements of the chart and utilizing our Fibonacci ratios, we have determined our estimated values with the guidance of our guidelines. Of course, as previously mentioned in our lessons, it is crucial to follow price movements on guidelines, especially in terms of upward movements. I will conclude our analysis at this point. When conducting analyses, it is crucial to observe a great deal. By doing so, your observations will positively influence your experience with chart movements. Thank you for watching, and subscribing to my channel would make me very happy.